Vanguard and Fidelity are two of the world's leading brokerage firms. Both rose to prominence through their low-cost mutual fund lineups, and they remain industry leaders in that area. Not too long ago, Vanguard and Fidelity also unveiled their own robo-advisors and now go toe-to-toe in this arena as well. This episode will show you how Vanguard versus Fidelity stack up in terms of their mobile experience, security, fees and commission, and customer service. But before we go too far, don't forget to hit that subscribe button so you don't miss the next videos on the best investments to make on your chosen platform. Now, let's take first an overview of both platforms. Vanguard got its start as a direct-to-consumer mutual fund company, but has since evolved into a full-fledged brokerage firm, offering everything from stocks and bonds to options, mutual funds, exchange-traded funds, and more. Vanguard also offers a robo-advisory platform known as Vanguard Digital Advisor. Fidelity has always been a low-price leader when it comes to stock trading, and now its commissions for online stock, ETF, and option trades have dropped to $0. Fidelity also has a well-regarded mutual fund family and a robo-advisory platform dubbed Fidelity Go. Vanguard's mutual funds are award-winning because of their low fee structure and solid performance over time. Whether you choose a full brokerage product or the low-cost Vanguard Digital Advisor, you'll likely make a good choice. On the other hand, Fidelity has broader investment options. You can even purchase Vanguard funds through Fidelity. Unlike Vanguard, you can get started with less than $3,000, although fees are higher than Vanguard's. Let's take a closer look at how Vanguard versus Fidelity comparison. Key features of Vanguard and Fidelity. Opening an account. Fidelity gets the nod over Vanguard when it comes to the ease of opening an account. For Fidelity, you can simply log on to the website, answer a few questions regarding your investment objectives, risk tolerance, and the amount you can invest, and provide basic identifying information such as your age. At that point, you'll be presented with a sample portfolio based on your responses. For Vanguard, the same overall principle applies in terms of getting a portfolio. However, before you can begin the process, you'll have to sign up for a generic Vanguard account. The $3,000 required to open a Vanguard Digital Advisor account must first be invested in the Vanguard Federal Money Market Fund. Maintenance. Both robo-advisor platforms offer standard features such as automatic rebalancing and automated investing. Retirement planning. Both Fidelity and Vanguard offer their robo-advisory services for traditional and Roth IRAs. Portfolios. Vanguard's Digital Advisor platform offers access to 4 ETFs. Vanguard ETFs, Vanguard Total Stock Market ETF, Vanguard Total International Stock ETF, Vanguard Total Bond ETF. Investments are allocated among these 4 choices based on an investor's self-provided risk tolerance and financial goals. Fidelity allocates user investments across its line of 7 Fidelity Flex funds. Depending on how you fill out your investment questionnaire, you may or may not be invested into all of these funds. Fidelity Flex Fund, Fidelity 500 Index Fund, Fidelity Small Cap Index Fund, Fidelity Mid Cap Index Fund, Fidelity International Index Fund, Fidelity Municipal Bond Income Fund, Fidelity US Bond Index Fund, Fidelity Nasdaq Composite Index Fund. All of these funds have a 0% expense ratio. Goal setting. You're completely in charge of the investment goals you want to save for when you use the Fidelity and Vanguard robo-advisory platforms. For both, when you open an account, you're required to complete a questionnaire that asks for information such as your age, risk tolerance, and investment objectives. Your portfolio is then customized according to the specific goals you've outlined. Tax advantage investing. Fidelity offers access to tax advantage investing through its Fidelity Flex Municipal Income Fund and its Fidelity Flex Conservative Income Municipal Bond Fund. Regardless of whether you want any tax advantage investments or not, you can contact Fidelity and specify your investment parameters in terms of tax management. Vanguard only offers 4 ETFs in its robo-advisor platform, none of which are dedicated to tax-free investing. Vanguard versus Fidelity online mobile experience. Both brokerages have robust online and mobile experiences, so while each firm has features and investments that favor specific types of clients, the quality of their tools and platforms are unquestionably strong. Vanguard's trading platform and apps are fairly basic, in keeping with the general aesthetic of the company. You can do everything you need to do as a low-level investor, make trades, buy mutual funds, and check your performance. The platforms don't have all the bells and whistles an experienced investor might want, but for someone who just wants to manage a few basic investments, it works. Fidelity, on the other hand, has a more complicated and extensive online and mobile experience. While this may be a bit overwhelming for someone without a ton of investing experience, if you have been trading for a while, Fidelity may help you take your investing game to the next level. Vanguard's mobile app has a major variance in its satisfaction level among users. For the Apple version, users rate it at 4.7 stars out of 5 across over 167,000 reviews. But on the Google Play Store, Android users rate it at just 2.2 stars out of 5 across more than 5,350 reviews. The brokerage is releasing a new app called Vanguard Beacon though, and it promises to have more features and tools for clients. Fidelity's mobile app has a much higher level of user approval than Vanguard's does. In fact, more than 1.6 million iPhone users have rated the app to an average of 4.8 stars out of 5 in April 2021. And the app also holds a respectable 4.2 star out of 5 rating on the Google Play Store across more than 87,000 reviews. Vanguard versus Fidelity fees. Fees are important to consider when picking a brokerage firm to open an account with. You'll want to make sure that the fees are fair and within your budget, as an overbearing fee structure will have a large negative effect on your portfolio. A commission-lowering wave has struck brokerage firms over the last couple of years, and Fidelity and Vanguard have both followed suit. To trade stocks, ETFs, options, and most mutual funds, clients of both firms will avoid commissions altogether. Options at Vanguard come with a minimal $1 contract fee, while Fidelity charges an even lower 65-cent contract fee. There are also some transaction fee mutual funds that can incur costs, with Fidelity and Vanguard charging $49.95 and $20 for them respectively. For bonds, Fidelity's commission is cheaper at $1, as well as a $19.95 fee if you initiate a broker-assisted transaction. Vanguard unfortunately doesn't offer new issue bonds. However, its secondary market bonds come with a higher $25 broker-assisted fee. Vanguard's funds lower the expenses that ETFs charge to around 0.10%, which equates to about $10 per $10,000 invested. But with actively traded funds, investors may see expense ratios as high as 0.19%. Fidelity mutual fund costs can vary, but they often have expense ratios that are higher, especially for active funds. It's no surprise that Vanguard is cheaper here, as the firm offers many of its own funds to clients. Vanguard versus Fidelity Security. Fidelity Security offers the type of guarantee designed to make clients rest easy. With the Fidelity Customer Protection Guarantee, the firm promises to reimburse customers for any losses incurred as a result of unauthorized trading in accounts. Specific security protocols used at Fidelity include two-factor authentication, security text alerts, voice identification, encryption, firewalls, and constant system surveillance. Vanguard has a similar online fraud policy, offering to reimburse assets taken from your account if you're a victim of unauthorized transactions. However, the firm does caution that you must follow the steps outlined in the Your Responsibility section of the policy to be protected. Beyond this pledge, Vanguard uses many industry-standard fraud protection policies ranging from encryption and password protection to SSL certification and security questions. Vanguard versus Fidelity Customer Service. Fidelity offers 24/7 phone-based customer service. It also has an online chat option available Monday through Friday from 8 AM to 6 PM EST. Vanguard's customer service is a bit more limited, offering phone hours from 8 AM to 8 PM EST Monday through Friday only, with no live chat option available. Should you choose Vanguard or Fidelity? Vanguard is best for long-term or retirement investors, those who prefer low-cost investments, index fund and ETF investors. Fidelity is best for frequent traders, beginner investors, research and data, retirement planning assistants. If you want to actively trade within your accounts, Fidelity might be the better option. However, if you're more focused on index investing or you want to use a robo-advisor, Vanguard has a slight edge. While both institutions offer robo-advisors, Vanguard's personal advisor services, which is available to clients who can meet a $50,000 account minimum, offers a little more hands-on investment guidance and assistance with portfolio construction. Vanguard also has slightly lower expense ratios on their index funds. If you want help with financial planning, mutual funds, or retirement and brokerage accounts, both have great options. it's best to compare cost and minimum account requirements of each firm and fund selection. By comparing your options, you can discover the most suitable firm for your financial needs. That's it for this episode. Please give us your feedback in the comment section below. To watch more episodes on financial topics like this, hit that like and subscribe button. If you want to support us even more, buy us a coffee from the link in the description. Good luck and see you in the next episode.